Hi there, Dave Keller here with Market Misbehavior. When I interview people, I love to ask them what their one chart would be. And that is, if you had one chart, just one chart, besides just a regular chart of the S&P 500, to give you a good read on the overall market environment, what would it be and why? So here's my one chart for today.
It's a ratio of the Nasdaq versus the Dow. This came off of Twitter. I had a question about the ratio of the Nasdaq versus the Dow, and the person had said, does it concern you that that the Nasdaq has been underperforming the Dow over the last couple of weeks? And in the top panel here, you have a ratio of the Qs versus the diamonds. So the Nasdaq 100 ETF and the Dow ETF. If you look, these actually moved relatively flat to one another through middle of 2019, and then in the fourth quarter, this ratio started to appreciate. And this is when, another chart to keep in mind, if you have a ratio of the XLK, the technology ETF, versus the S&P 500, it looks kind of similar to this. The outperformance really emerged in the fourth quarter. What's interesting about this ratio is it continued to accelerate higher as the Qs outperformed the diamonds through the market peak. So at the bottom, we have a chart of the S&P 500. You can see the market peaking here the third week in February. Since then, the market came off, sold off, pretty aggressively into the third week in March. Over that 4-week period, this ratio at the top didn't roll over. It actually accelerated to the upside. So during the market sell-off, people were flowing over to technology as a safe haven of sorts, right, into the big mega cap tech names that have proved so stable and so consistent for quite a while. What's interesting, though, is when the market recovered, when the market rallied, and you would expect people to be getting back into the juice, back into the more speculative, higher beta names in technology, the ratios actually rolled over. So the Qs have actually underperformed the Dow since the market bottomed out a couple weeks ago. So in answer to the earlier question, does it bother you that the Nasdaq is underperforming the Dow? No, I'm not concerned about that because I don't think it illustrates a great overall sentiment about stocks. What I do think it represents is a potential sector rotation and really a leadership rotation. So people rotating away from that tech safe haven theme that we saw through the last couple of years, where it's sort of the big stable tech names as being where you go. Now we're seeing that ratio roll over with people flowing into more other more defensive areas like utilities, maybe real estate, consumer staples. Financials have rallied pretty well in the last week or so. So which of those emerges as the new strength, I'm not sure. But I don't think this ratio tells you a lot about the overall market direction. What I do think it tells you a lot about is that theme of potential, consistent tech leadership across the board, no matter what, maybe starting to weaken off a little bit. And if we get the end of a bear market rally, the next rotation lower, I wouldn't be surprised if that ratio continues to go down as people look for safe havens elsewhere. So that's my one chart for today. If you have any questions, I'll hope to see you on my website, marketmisbehavior.com, or at Twitter, at dkellercmt. This is Dave Keller. Have a great day.